Sorry, I'll start again there. So good evening and welcome to our guest joining us this evening on Student Finance Overview. And thank you very much to Study Hire for inviting us along to give you a quick high-level overview of obviously student finance and what's available for adult mature learners. So without further ado, I'm just going to cover off some basic introductions around who Student Finance England are and what we do. So as the information on the slide suggests, we are working on behalf of the UK government to provide financial support to all eligible students from England that wish to enter into higher education. And for those that are considering moving into higher education, there are really two main costs that you need to be thinking about. The first one is obviously the tuition costs that are involved with studying in higher education, and these are costs that are charged by the university to accept you onto a course and then to be able to teach you as well. And then there's living costs. Now, the important thing here is that Student Finance England make funding available based on your personal and course eligibility to help you with both of those. And as the bullet points following that suggest, there is additional support that you may be able to get based on your personal circumstances. The amount you get is determined by the course and where you live and study. But what we find is a lot of mature adult learners don't actually move away from home to study, so they do tend to stay in their own home or their parental home or their partner's home. And for that reason, there are certain rates that are fixed in place for obviously what the maintenance loans are available. And my colleague Stacey will talk to you a little bit more about that in a short while. One of the things that I do like to cover...
Just interrupt a sec. I'm not sure your screen's sharing properly, or I can't see the slides moving. I don't know if you're...
Can you share it as a slideshow, am I? It's still in the sort of display format.
Sorry, it's moving now. I can see it.
Yeah, I think there might just be a bit of a lag. Is it moving okay for you now?
No. I can see you're on general eligibility, but it's not showing as a slideshow. It's still showing, I can see all your slides on the left-hand side.
Okay, that's interesting because I'm running it as a slideshow from the actual beginning, so it should be okay. It should have now taken you back to the introduction. Can you see the introduction slide?
No, it's still on eligibility.
Okay, yeah, it's still there.
Okay, so general eligibility, you should be able to see all of the bullet points up. Any better?
We can see it. It's not as a slideshow, but we can see the animations and stuff won't work, but we can see the presentation.
Okay, that's interesting. Sorry to apologize. I'm not sure when that's happened. So one of the areas, as I was saying, that we do tend to cover off, and it's good for a sort of an overview of what makes for general eligibility. And one of the key things is always residency. We get these questions asked of us quite a lot on a daily basis. And I think it's always good to have a refresher. And the bullet points there, I won't verbatim each one of them, but it does identify what constitutes somebody becoming eligible under a general high-level residency criteria. So the first one, as it suggests there, you have to have settled status, so you can live in the UK without any home office restriction. Then we obviously look at 3 years ordinary residency before the first day of the first academic year of the course. We're aware of what took place post-Brexit. We ran a very successful webinar last year around this. And for those students who are EU pre-settled or settled, there are two different defining entitlements for the tuition and the maintenance costs that are involved for studying in higher education. And again, it does depend on what status an EU citizen would have been granted at the time of remaining in the UK. We've put a link into the particular slide there, so hopefully you can see that link. So once these slides are shared, please do feel free to have a look at it, and it will take you directly to some signposting resources where you're able then to identify who does actually qualify, what your personal circumstances might be. And again, because unfortunately we just have the one guest this evening, it may not actually apply to you, and you may already qualify for eligibility for student finance access. So at this point, I am going to hand over to my colleague, Stacey, who will talk a little bit around what student support you can get for the academic year that is currently approaching us, and that's from September 22 to 23. So Stacey, if you can see that or you are able to share your screen, over to you.
No worries. So hi Sam, welcome to your personalised student finance session today. Nice to have you with us. Obviously very nice and niche small group today. So essentially, if you've got any questions as we go, feel free to pop them in the chat, because we're not going to have 20 people all asking questions at the same time. So I am conscious of time, and we've got quite a lot of information to go through. So ultimately, I'm just going to highlight hopefully the key information that I think is going to be most of interest to you. So we are going to start with what I like to call the bread and butter of student finance. So ultimately the core finance support available for academic year 22 and 23. So first off, Amar's already touched on sort of the two main parts. Oh, sorry, Amar, you've lost your share screen. I will share mine. Bear with me. Right.
My screen is sharing, so you should be able to see that.
It's back, is it? Okay, perfect. Oh, it's disappeared again.
Maybe share yours, Stacey, if it's working.
Okay. Do you want to stop sharing, Amar, and we'll quickly
yeah
jump into mine? Apologies for the technical issues.
Okay, I've stopped sharing mine, so try yours now.
Okay, so let's go back. Screen number 2.
Yeah, there we go.
Visible? Perfect. So we're going to start off with tuition fee loans, and the reason for that is that they're quite nice and easy to understand. So obviously tuition fees does what it says on the tin and ultimately provides you with support to pay for your university tuition. The maximum tuition fees for the upcoming academic year have actually been maintained at the same level as they were the previous academic year, and in fact lots of previous academic years. So it's actually the 5th year in succession that fees have been frozen. So just to build on that, the maximum tuition fee that any sort of standard full-time courses that are offered by an approved or fee cap provider with something called an access and participation plan and TEF ward is going to remain a maximum of £9,250. So ultimately, any university in England can only charge a maximum of £9,250 per year in regards to your tuition. Obviously, there are different costs involved dependent on the type of course that you're going to want to do. So we'll just quickly touch on those. So the maximum tuition fee for a full-time accelerated degree course, again offered by that approved or fee cap provider with that APP or TEF, is going to remain at £11,100. The maximum for part-time courses, again offered by the approved or fee cap provider with the APP and TEF, is going to remain at £6,935. So in a nutshell, that is tuition fees. Obviously, when it comes to tuition fees, you don't actually get that money in your bank account yourself. We ultimately send that to your university at the beginning of each term. So that's something that you don't necessarily need to worry about too much. As long as you've applied, got it approved, and attend university, those funds will be released and your tuition will be paid. So probably the one that's of most interest to the majority of students is the maintenance loan, otherwise known as the living cost loan. So obviously this is the one that, again, does what it says on the tin and is ultimately there to help you with living costs whilst you are studying and attending university. The amount that you actually get will depend on your household income and where you live and where you study. This one's actually paid directly to you in your bank account at the start of each term. Obviously, both of these products, the tuition fee and the maintenance loan, are loans, so they do have to be repaid, but ultimately you don't start making any repayments until the April following you leaving university or withdrawing from your course, and you still won't start making repayments until you earn over a certain threshold. So a certain salary is when you will start making repayments, but Amar's going to talk to you about that in a little bit more detail later on. We've mentioned that your maintenance support is based on household income being one of the factors. So when we say household income, we ultimately mean the income of your parents. If you're living with your parents and you're sort of an 18-year-old student residing with your parents. However, if you are a mature learner, it's ultimately down to your income yourself and your partner or spouse who you're residing with. Okay, so probably the most important thing is how much could I possibly get? So I have mentioned, aside from household income, the amount that you will receive also depends on where you live and where you study. So just to give you a little bit more detail with this, the parental home rate. So this is ultimately if you continue residing in your own home whilst you were attending university. So that is the maximum amount available for that is £8,171. If you're going to be studying away from your home city, but outside of London, the maximum amount available is £9,706. If you are studying away from home, but in London, as we know, London's a little bit more expensive than the rest of the country, and ultimately your student maintenance loan will reflect that. So the maximum amount there is £12,667. There is also the option for some students who wish to study overseas as part of their UK course. With that, they would be eligible for the overseas rate, where the maximum is £11,116. So we've touched on the fact of the household income forming part of ultimately how much you get from your student loan. So again, you will see the column in green shows the maximum rate dependent on where you're residing whilst you're studying. To the right of it, we also show what we call the non-income assessed amount. So ultimately, if for any reason you decided that actually, no, you didn't want to be means tested, you didn't want to send your financial evidence, for example, you have the option of having a non-means tested loan. So the minimal amount in that sense for somebody who's residing at home would be £3,597. And we say, dependent on your household income, that can potentially add up to an additional £4,574, which will give you that total of 8,171, or on that sliding scale up to that maximum. So I won't bore you by running through every single column or every row, because ultimately it does the same thing. Okay, so this is probably the important part to judge exactly sort of how much you can expect to receive. So this is an approximation looking at household income and ultimately how much you're likely to get based on that household income. So again, don't want to go through every single figure on here because I'm very conscious that it's 7:30 at night and nobody wants to hear lots of figures. So if we just pick a couple of examples, and again, we will use the home rate. So if your household income is £25,000 and under, then you will get that maximum amount, which in this case for residing at home is going to be £8,171. You will then notice that as the household income increases, the amount of maintenance available to you will decrease. So we'll pick another figure and we'll say a household income of £40,000 means that that student residing at home ultimately will be eligible for sort of up to £6,108. You will see that there are some red, lots of red at the bottom, and ultimately what that is showing is where that capped non-means tested amount will start. So if your household income is deemed sort of £60,000 and over, you will notice that you will only be eligible for the non-means tested amount. So with the home example, the maximum that we've already mentioned is £3,597. So for those residing at home, that household income actually caps at £60,000 per year. For those that are residing elsewhere, that non-means tested, or that cap, comes in at 65,000 household income. And for those residing in London, the maximum, or the cap there, is £70,022. So in that instance, the non-means tested amount for London is 6,308. What I would say, Sam, if you're interested in having a look at your sort of use specifically, we do actually have a student finance calculator available on gov.uk, and you can actually type your own figures into that, and it will give you an approximation of what you can expect to receive in form of maintenance. So the maintenance figures that we touched on a moment ago are for students ultimately who are not eligible for benefits, so those who are not in receipt of benefits. What I did want to do, particularly for this session, is include some information around maintenance for those who may be in receipt of benefits. So in which case the figures are slightly higher. So you'll notice with these that for any new full-time students or any eligible continuing full-time students who started in 2016 onwards and are eligible for benefits, for those people that are residing at home, the maximum amount available is actually 9,640. So bit of a significant increase on those who are not eligible for benefits. If you're in that situation and you're going to be away from home but studying outside of London, the maximum amount is £11,064. For those in London, the maximum is up to 13,815, and for overseas, that's £12,374. So again, very similar sort of table here, just to show you that maximum amount and the non-income assessed amount. I'm not going to spend too much time on this because essentially the setup is exactly the same as the one we went through before, albeit with higher maximum amounts available. What I did want to draw your attention to is ultimately the special support element of the loan. So apologies, jumping ahead of myself. So when it comes to students who are on benefits, your student income does get classed as income as far as the benefits office are concerned. However, not the full amount will be regarded as income. There's something that's called a special support element of the loan. And what this means is that if you are entitled to benefits, you have this special support element, and ultimately it's disregarded by the DWP when working out your benefits, such as universal credits. I've got a bit of an example for you in a moment, but just to show you again, like we already have with the other scenario, how the household income works for those who are on benefits. So again, we won't use every single figure, but just for continuity, we will pull a couple out. So if, for example, you are studying, your household income is below 25,000, you are residing at home, then ultimately that loan is split between the special support element, so that bit that is disregarded by DWP, which is £4,106 in that instance, and the top up, if you will, of maintenance, which can be up to £5,534. So ultimately it's a 5534 that will be considered as income by the DWP, and it will be the 4106 which is disregarded. With this one, again, you will notice similarly that as your household income increases, the amount of maintenance support will decrease. So again, for continuity, we'll use £40,000. So in this instance, if your household income is £40,000 and you are residing at home, you'll notice that the total amount available to you from a maximum perspective is lower, like we say, consistent with the last table that we saw. However, that also means that the special support element will reduce. So in that example, 40,000 at home, it will be a special support element of £811, which is disregarded by DWP, and it will be the 5534 that is then regarded as income. So one of the main questions that we get asked by a lot of people who might be on benefits is, or one of the problems, should I say, one of the gripes is, I'm losing a lot of money with universal credit in order to come to university, and I don't know if it's going to be feasible. I don't want to lose money effectively, which is more than understandable. So what I've actually done is create an example from a case, a student scenario ultimately that we were engaged with. I do want to highlight that this is an example that we took in 2019. So the figures as far as maintenance and whatever the universal credit rate isn't necessarily going to be the same now. But ultimately just want to show you in principle the difference between somebody who is not studying and is on benefits to somebody who then decides to study whilst being on benefits. So this particular example, we've actually taken a letter from a student and used all the DWP's workings. So ultimately, universal credit can be made up of a variety of different elements. So for this particular example, the student, or before this lady was a student, she was entitled to £317.82 as a standard allowance. She then had a housing element of 364.60 and a child support element of 277.08. So ultimately, all that we're interested in here is that equated to £959.50 per month that she was receiving from universal credit. Okay, so in this example, obviously the nearly student is on benefits and therefore does not necessarily have a household income of over 25,000, and therefore they are entitled to that maximum amount of maintenance loan. So in this example, and I think this was an elsewhere example, so the student was not residing at home, they were residing elsewhere, but ultimately they were awarded a maintenance loan of £10,962. So that total figure is actually made up of their maintenance loan payments and their parent learning allowance based on the figures in 2019. So out of that 10,962, a total of 3,783 is what was considered as that special support element. So that's the bit that ultimately is disregarded by DWP. So therefore, the amount that is considered as income by the DWP is £7,179. So what we have done is looked at that 7,179, divided that by the 9 months when you're expected to be in study, and that worked out as around about £797.67 per month that ultimately is going to be regarded as income. Now, students are very lucky in the sense that they actually have what they call a student income flat rate disregard every month, and that is for the amount of £110. So ultimately, that's reduced the income, if you will, the student finance income down to £687.67. So if we look at these two examples, with their 959.50 entitlement to universal credit previously, with that 687.67 of student finance income, and we have included this, apologies, I'm not a job centre benefits specialist, but they had a deduction called overlapping benefit deduction. So just for visibility, we made sure that we included that figure. But ultimately, what this means in a nutshell is that this student's universal credit reduced from £959.50 down to £240.50 per month. So when students will see this, automatically you're going to be a little bit anxious because it's quite a significant drop of income that you're receiving from DWP. However, when we have then actually worked in the student finance maintenance support calculations, we've tried to do a side-by-side comparison. So example A is ultimately the student before they were a student and they were receiving benefits. So they were ultimately looking at round about £8,635.50 during that academic year, so over the 9 months. So that is ultimately the income that they were receiving from universal credit to live on. However, if we look at example B, so this is now the student who is in receipt of student finance alongside that £240.50 of universal credit, you'll see that aside from the £2,164.50 that they are getting in universal credit, they are also getting that £10,962 worth of maintenance loan and parental learning allowance. So ultimately, they've gone from having an income of 8,635 to round about 13,000 over those 9 months. So just want to highlight that ultimately being on benefits should not certainly be an obstacle to not wanting to study at higher education. Okay, so aside from obviously the bread and butter support and obviously the additional support perhaps that you can get from the state, we do actually offer additional financial supports. So one of the big ones is disabled students allowance. So again, does what it says on the tin. These are for students who may have a disability, a long-term health condition, any mental health conditions, or specific learning difficulty. We also have something called the Grants for Dependents range. So again, for students who have children and looking for support whilst they are attending university. There's also additional finance support available for students who are studying any eligible nursing, midwifery or allied health profession courses in English universities. And there are a couple of links on there. So if that's something you want to explore in a bit more detail, please do click on those links. I'm sure the slides will be available. We'll take a quick scribble of those now. And I'm sure you will be aware of this already, but lots of universities and college offer their own financial support packages in the form of bursaries or scholarships. So again, definitely worth looking at your chosen university to see what's on offer. So I've touched on disabled students allowance, and I'm just going to give you a little bit more context to show you how that works. So previously we had what we called 4 subcategories, and every category had a maximum amount that you could use for each category. So for example, if you needed specialist equipment to assist you with your studies, the maximum amount that we would give you towards that was £5,849. We've done away with that. Ultimately, we've tried to simplify the policy to make it easier and give more flexibility to the student to have that autonomy to determine where these funds are best placed. The great thing about DSA is that it is a grant, so that means that it does not need to be repaid back, unlike the maintenance loan and tuition fee. And the maximum amount available per year is £25,575. So ultimately, if you do suffer from any health conditions, disabilities, or like we say, depression or anxiety or anything, it's definitely worth reaching out and exploring this in more detail. Okay, so we touched on grants for dependents. So within grants for dependents, there's basically sort of 3 products. We have what we call the childcare grant. Again, pretty similar to what the title states. This is to help look after children at registered or approved childcare providers. That is subject to a maximum amount on a weekly basis. So if you have 1 child, the maximum amount that we would pay for CCG is £183.75. If you have 2 or more children, the maximum amount available is £315.03. We also have what we call the parental learning allowance. So the parental learning allowance is designed to help with course related costs. So things like books, study materials, things like that. There's quite a wide range of potentially what you could get from that. So I think it's anywhere between £50 and 1,000 oddsies. So again, it is dependent on household income and your individual circumstance. And finally, within that range, we have something called the Parents Learning Allowance. The Adult Dependent Grant is the final one. So that one's ultimately designed for students who may be have a dependent who is an adult. Again, there are certain criteria in the sense that the adult who's dependent on the student cannot be earning above a certain amount. Amar, you can correct me, but it's around about 3,800 and something. So that's just something to be mindful of. But again, there's quite another sort of big chunk available in the form of the adult dependent grant. So if you are responsible for financially responsible for an adult who's dependent on you, they don't earn over that certain threshold, then again, there is extra support for you. All of these ranges, again, are grants, so none of them need to be repaid. This slide we just want to highlight because whilst I have touched on the fact that the amount awarded to a student is based on the household income, it can have an effect. So just to show you what we call the household income thresholds, if you will, for what support you will receive with each of these products. So if, for example, you are looking for help with your childcare costs and you've applied for the childcare grant, if your income, your household income is over £19,281.99, you are only eligible for the minimum grant. Unfortunately, the minimum grant is only 1 penny. So it's just very mindful that you are considering household incomes when looking at your expectancy for the childcare payments. However, like I say, that is on a sliding scale. The maximum amount that you can actually get for your one child at university in that 9-month period is £9,555 per year. If you have two or more children, then ultimately you can get up to £16,381. Okay, so just I think finish up with independent students. So if you are aged 25 and over on the first day of the first academic year, or you meet one of the other criteria, such as you've been married, you've been in a civil partnership, or you are currently married or in a civil partnership, if you're taking care of a person under the age of 18, or if you've supported yourselves financially for 3 years before starting your course, you are effectively assessed as independent. We also have another independent status, which is known as estranged, and this is for students who have had no contact or are ultimately estranged from their parents. For students who are care leavers and looked after by the local authority, they are also classed as independent students, and you'll see a couple of links available on there for more information. And now I'm going to pass you back to my esteemed colleague. Would you like me to be your slide clicker, Amar?
I was just about to say, Stacey, yes, if you could keep sharing your screen, seeing as though yours is working a lot better than mine, then I'll just sort of cover off the final few slides for Sam. So not going to go into too much detail around the whole NHS BSA training grant. We did put a couple of links in terms of what additional support is available. But if you move on to the next slide for me, please, Stacey, you'll notice that back in 2020, during the pandemic lockdown, oops, it's jumped ahead. So if you just go back one, please, Stacey, if that's okay.
2 seconds, I think it's got a delay.
Okay, there we are. It's got a mind of its own this evening. So, Sam, back in 2020, the government reintroduced the £5,000 training grant, which is available from the NHS directly, not from Student Loans Company. And this is for anybody that's considering going into the NHS profession. So you may be working somewhere, thinking about returning to higher education and going for a career change. So what will happen is that if you are entitled to and receive the maintenance loan from us, the tuition fee support from us, then the NHS will give you an additional £5,000 training grant, which is not repayable, which is available directly from the NHS. Stacey, if you move on to the next slide, there are a couple of hyperlinks at the bottom, Sam, for you to have a look at when you get these slides. But just to expand on that a little bit, what the NHS also do is introduce what's known as the Learner Support Fund. And what that is that they give you an additional £2,000 towards childcare costs. And remember, Stacey mentioned about the childcare grant that you can draw down from the student loans company based on your household income. So the NHS will give you an additional £2,000 if you have a child of 15 and under in full-time education, and 17 and under if they have special educational needs and are statemented under that category. There is also an additional £1,000 from the NHS if you decide to study one of the shortage specialism subjects, and we've put that in a table for you. So nationally, the NHS does tend to struggle with recruitment for learning disability nursing, mental health nursing, orthoptics, podiatry, radiography, diagnostic and therapeutic, and also prosthetics and orthotics. So if that was an area that you or somebody else was interested in, what the NHS would do is, on top of the £5,000 training grant, if you have children, on top of the 2,000, so we're up to 7,000, would give you an additional £1,000 for the fact that you're studying a shortage subject recruitment specialism. On top of that, because NHS courses have clinical placements attached to them after you start your university within about 4 to 6 weeks, you can also apply for travel and dual accommodation. So let's say, for example, we're currently in Northampton. If you were studying locally and your clinical placement was not in Northampton because they weren't able to offer you a clinical placement, but you had to travel to Birmingham for 2 nights a week or 2 days a week, you could draw down the costs of having to stay in accommodation for those 2 additional nights. And this is all available directly from the NHS. And the hyperlinks that we've included within the slides will give you a lot more information. So when you do receive it, please do have a look at that if NHS is something that you are interested in looking to sort of move into from a higher education perspective. Stacey, if you move on to the next slide. So very quickly, I'm just going to cover off obviously what the application means and what the application process is, and all of the support resources and the materials that we have available. As you know or may know, Student Finance England had launched in early March. The application cycle is open for everybody considering starting higher education in academic year 22-23, which will be from September. So if that is you, Sam, and you're considering starting higher education this year, please do go onto the gov.uk website, Student Finance, and have a look at these resources that we are supplying you with, just to have a look at what the process is, how it works, what you need to do, what evidence you would need to provide, what identity evidence you would need to provide to make a seamless application from end to end, so from apply to you receiving all of your maintenance support and any supplementary grants. Next slide, please, Stacey. It's okay, you can click through to the next one. That's part of the first slide. So it's all part of the resources information. One of the things that we talk about quite comprehensively when we do go out and do a lot of these sessions and talk in colleges and universities and training sessions is we try and sort of reiterate the importance of making an early application. And the government sets a hard deadline. The hard deadline will be the 25th of May this year. It's not that you can't apply after May, you can, but from a processing point of view, our assessors process every year around 2 million applications. It's exactly 1.9, and that's for all of our products that are available. So in order to make sure that your maintenance support and any supplementary grants that you need for when you do start university are in place, be that this year or next year, we do encourage an early on-time, right first-time application. And what that means is that if you get your application in, but you don't start university, you're not liable for anything because we don't release any payments to you or your university unless you have actually started university and they've confirmed your attendance. So you're not liable for anything just because you've made an early application. And that's something that does worry a lot of students, given the misnomer around the name of being a student loan. So please don't worry about that. We encourage early applications purely for processing purposes to ensure that your application is in, it's ready, and that any support that you're entitled to is ready to be released to you into your bank account when you do start higher education. Next slide, please, Stacey. And again, this slide just sort of demonstrates what we would expect you to have in place at the point of making your application. So in order to verify your identity, and we do need that to be verified, we expect or prefer, I should say, a passport, and it must be a valid in-date passport. But if you don't have one, then your birth certificate. And in previous years, a new change has come about just very recently, but in previous years, we expected an original copy to be posted in to us, to our processing centre in Darlington. But now, because we have what's known as a digital upload system through your application, you can upload all of your evidence, scan it and upload it directly and send it so it reaches at the same time as your application. And if you do have a partner or somebody who's prepared to sponsor your application, and by that we mean for your household income assessment, the same applies to them. They apply Shortly after you've submitted your application, we contact them via email because you would have provided their email address. An instruction will be sent to them as to how they then go ahead and process their part of the application by providing their household income. Next slide, please, Stacey. So one of the enhancements that we've made this year, and it's been extremely successful, as of the 1st of April, we had 100 million users accessing it and tapping into this new service. It's all about giving the ownership back to the students. So when you make an application, again, up until this year, if students needed to chase something, where is their application? What stage of the assessment is it at? When are they likely to receive their payments? They would get onto the telephone helpline and call us. And at peak times, they could potentially be waiting 30, 40, 50 minutes just for somebody to take that call. One of the enhancements that we've made now with the self-service enhancement process and the project team that were involved in this is affectionately known as CEM, so the Customer Engagement Management Process. What this does is it gives you ownership of when you submit your application online. You use your 10-digit customer reference number to access the portal to be able to see what is happening with your application in real time, look at all of the notifications we may need to send you to ask you for further evidence if that's what's required. If not, if it's a smooth and seamless application, you receive all of your notifications as to when your payments will be made each term and the date that those payments will be made. So really, this is about giving ownership and power back to the student to be able to manage the journey, the life of 30 years potentially with us, the relationship that you will have with SLC, to be able to understand what your commitments are to SLC and what our commitments are to you. Next slide, please, Stacey. And again, there are some resources that we've produced with regards to understanding the living costs. There are some guidance on the Gov UK. But again, if you look at some of these hyperlinks, there's a lot more information in terms of resources to help you understand how to go about potentially budgeting for when you are in higher education. And it's certainly important for mature learners and adult learners who may have other commitments, such as children running a home, to be able to look at how the maintenance support and any supplementary grants and any additional funds that they get from the NHS, if it's an NHS course that they're doing, how they're likely to be able to manage that money on a monthly basis. Next slide, please, Stacey. And again, I think the next few slides are pretty much all about resources. So I'm happy for Stacey just to be able to flick through this, and you can have a look at this at your own leisure by having a look at what resources we've made available, what fact sheets. Very quickly looking at repayments, and you'll notice that we've titled it Facts and Policy Reform. So the way that it currently works, and there's been a lot of attention recently in the media, in the press, around student loans and the reforms that might be coming into place and potentially are coming into place for next year. As it stands at the moment, for all students that are on what we call a Plan 2 income contingent repayment, and if you were to start in 22-23, that is exactly the plan that you would be on as well. The repayment threshold is currently 27,295, and this will be maintained until April 2025. So what we're saying is that if you start higher education in September this year, your repayment threshold will be 27,295. It will be maintained for a further 3 academic years, at which point it will then start to rise annually in line with inflation. I can't tell you what that is likely to be with regards to inflation in 3 years. I don't think Boris Johnson is likely to be able to tell you what that's like to be, or Rishi Sunak. But I can tell you that repayment and the facts around how it currently works is that you repay 9% of your income above the threshold. So if, for instance, you finish your degree in 3 years' time and you come out and land a job that is not paying you the threshold at what it might be in that time, let's just for argument's sake say it's £30,000, and you're earning £24,000, you make no repayments on the student loans that you've taken to have that career. However, if you then find a job that does pay you over the £30,000, and I'm just using £30,000 as an example, in 3 years' time, and you're earning £34,000, you would pay 9% of £4,000, not 34. It's the difference between the threshold and what you are actually earning. And the write-off period for all Plan 2 customers will remain at 30 years. This is only changing for any students that don't start this year and are likely to start in 23 and 24. So if we have a look at the next slide, please, Stacey. This table illustrates currently how the Plan 2 system works. And if you look at the left-hand column, you can see we've used examples of salaries. And the middle column shows you the 9% deduction, what it would be from. So example, For the very first one of 27,295, somebody were earning that salary, they wouldn't be making any repayment because they're not above the threshold. They are slap on the threshold. So there's no 9% difference to deduct from what they're above the threshold. But then you can see how it then transpires with regards to what the repayments would be if you are earning. And if we look at the 50,000 example, the difference would be 22,705, and your monthly repayment is likely to be 170 pounds. But then we've used an example of an annual income of 30,000 pounds, and the deduction difference being 2,705, and a monthly deduction of 20 pounds, somewhat less than most mobile phone contracts, a lot of people would actually say, and definitely cheaper than a night out on a Friday. So you can see that how the repayment works. It's based on what your career earning potential is, what you are likely to earn, not necessarily what you have borrowed from the student loans company to go into higher education and achieve the career that you are hoping to achieve. Next slide, please, Stacey. We've also put in some information and resources because there is a lot of spotlight on student loans at the moment, and obviously the reforms that are taking place. A statement was made by the Department for Education and Government on the 24th of February. So what we've done is put some factual information together for you from the Gov website and the Department for Education. So please do have a look at that in the event that you're not thinking about starting higher education in 2022 this year, and you are considering higher education in 2023 or even later. This will give you the factual information that you need to know to be able to go away and make an informed decision. Thank you. Next slide, please, Stacey. And again, just some social media channels for additional resources about understanding how the repayment process works. And in the world of social media, we are on Facebook and we are on Twitter, so you can follow us on all of that. That's absolutely fine, Stacey. And the next few slides, again, as I mentioned, are just resources. So I'm happy not to talk through each one of those slides, other than just to say that when you receive these, this presentation, I should say, and these slides, please do have a look at all of the resources pages, because they do give you an abundance of information to help you make that decision whether university is right for you. Is it affordable? It's not for everybody. That's absolutely true. But if it's right for you, then make the decision, but make it an informed decision. And all of the resources that we've provided and the information we've given you today will hopefully help you do that. And on that note, Sam, I'd like to thank you for being the only guest that has joined us this evening. You've had a very tailored one-to-one session. I hope you have found some of the information, if not all of the information, useful. I'd like to thank my colleague Stacey and Study Hire, who have hosted us this evening. It's been an absolute pleasure. If you wish to turn on your microphone, feel free to talk. If you wish to turn on your camera and be daring, please feel free to do that. If you have any questions, pop them in the chat box and we'll try and answer them as soon as we can. Thank you. Back to you, Joe.
Thank you. Yeah, Sam, if you do have any questions, just pop them in the chat. It was quite, went through a lot of detail. So if you've got questions that you think of afterwards, you can send them on to Study Hire and we'll pass them on and try and answer them. And then all the resources that you showed, you can send me the links to all them and I can forward them on.
Definitely.
Perfect. Thank you. Okay, so
Sam, do you have any questions?
Yeah, unless you've got any questions, Sam, we will finish it off there. I think you can turn your camera and mic on if that's what you're trying to do. Okay. Yeah, I don't think it's working, but yeah, just type if you've got any questions in the chat, just pop them in there. If not, we will finish up and let you get on with your evening. Thank you. No question. Brilliant. Thank you very much for coming along. And yeah, it was nice to have some participants this evening. And thank you both. Thank you, Stacey. Thanks, Emma. It's really nice. It's presentation. I will end the session there. Thank you.
Thank you very much. Have a lovely evening, all.